Alright, welcome back. It is Thursday, December 7th, 2023. Happy birthday, Dad. Let's start right here. We're at precisealgorithmtrading.com. And, no, let's jump over and do the automated trading systems first because that's really, yeah, that's our prime focus. So, what's nice about these is they trade both directions in the market. They buy and sell, and so on a down day in the markets, these things can make money, and on an up day in the markets, these things can make money, and everything in between. So this is our results of our trading. That's what an equity curve is. And this is for a 6 month period. So on the weekends, I review them and show over 12 months, which is really what they're built on. And anyways, if you follow that, you can go look at our website and check that out. So in the archives section. So this is the Dow, and it had two trades today for a little bit of a gain. Nothing really to write home about, but that's good. I'll take a gain. This is the new and improved Russell 2000, and it's gaining. And we haven't deployed this one yet because it's not quite finished, but I am tracking it, and what I'm looking to finish is to get these humps out of here, these dips I should say, just because I'd rather them be a little bit more forgiving or shallow. And anyways, we're tracking it just like we're trading it. So for now, and hopefully in the next weekend or two I'll be able to get to that. But here is a nice trade today. So all in, this thing's actually pretty good. It's just the drawdown is just a little worse than I want it to be. So this one is live, and it is the NASDAQ, and we got a decent pop back up today. 1, 2, 3, 4, 5, 6, 7, 8, 9 trades for a net gain. So there you go. That's the automated trading systems, and let's jump over to back to where we were. This is the S&P 500, and we're back still in this range. I was expecting it to break through because of the big bearish candle yesterday, but in the face of a bullish percent index that is on a column of X's and has been on a rip, I mean, that's what's holding this up. Is there's more buying activity, more bullishness in the market, and that, for what it's worth, is really what the bullish percent indexes measure. So I mean, the only thing we should be really doing is hedging, and that's all we have been doing, and the rest of our positions have been long. And actually, just for, well, we'll jump to gold in a minute. This is the Dow. It's also still walking sideways. This is the Russell that had a pullback, and now we're bouncing again. Nothing to get too excited about yet. The IYT, the transports, we have a hedge on that one, and it looks like it might fail, but if this rolls over, then that will be a lower high, and that's the high we got our stop based off of. So if this thing rolls over from here, we should see it break this pivot right here. So that's a big if. We might just break higher. So, and actually that would be okay with me because that means the market's moving nicely. So just want to catch them when they're down in this zone here, and try not to be chasing them up here unless it's for a move the other direction. The NASDAQ bounced nicely again today, but it's also been moving sideways. So again, I'm certainly not long the Qs, and I'm not long the S&P right now. It's more the opposite. So everything else is whatever it is on its own trend, which, let's jump to oil. I actually played oil today because if we look at the weekly, we've crossed this weekly moving average, and we had already crossed it back here. No, that's not. I'm sorry, not that. This one up here. We crossed it here. It went up and pulled back, and my stop is now here or here, and so it's a really relatively low risk trade after a run up like this. And if you take into account wave theory, these have been lower highs and lower lows, and then they put in an equal high or possibly a little higher high and a little higher low. But then this is definitely a higher high, and we're potentially putting in a real higher low. And if we do that, this thing's going to reverse. So this is a great place for me, based on the way I'm trading, to take a position. And I don't do it in CL, I do it in USO. So this is, I mean, I don't think it's arguable. This is a new higher high here off of what has been a downtrend. So we've gotten into a big higher high, and now we have to put in a higher low and then put in a new higher high above that, and that would be a heck of a move. So that's what it did. And my stop is probably here, but it could be here. So I don't remember what I set it on, but that's how that plays. Alright, so that's oil, but then let's flip this off of the weekly chart. And let's flip this to gold. So gold has been, I mean, obviously it was coming down, and then we got a higher high, and a higher low, and a higher high, and a higher low. The question is are we going to get a deeper pullback and remain as a higher low, and then possibly go on to a new higher high? The one that really got me today was SLV. Because we came down and tagged this 30 period moving average. It really looks similar to the gold chart, but I think this might actually have a better shot. So I'll be playing it if I get into it over here off of the hourly chart, and we'll go from there. So, and again, back on USO, really should have waited for probably some confirmation on the hourly chart, but you know, just the risk reward ratio here is pretty favorable, and we are outside the Bollinger Bands as well, so a bounce back to the mean would even be good. But if we get that bounce back to the mean based off of the weekly chart, I would say we're back potentially going higher. So let's look at that again. So and again, the risk is favorable, so that's all I'm saying. Let's go back to daily and then flip to the bullish percent indexes and wrap this up. The industrials didn't move. The NYA down 1.03%. The transports didn't move. The NASDAQ up 0.14%, which is hardly anything. The S&P down 0.86%. The S&P 100 instead of 500 didn't move. And the NASDAQ 100 moved down 2.78%. So, alright, we'll keep watching it, and that's what I got for you. So, have a great evening, and we will talk to you on our next review.